Hi, I'm Mary Kopczynski, the CEO of RegAlytics. Happy Thanksgiving, and welcome to this week's Regulatory Roundup. I'm going to do the roundup a little differently today. I'm going to talk about all of the regulators and updates that I'm thankful for. First and foremost, I am really thankful for the past decade of work that the entire industry did in resolution and recovery planning, also known as living wills. This was a Dodd-Frank requirement where big financial institutions had to plan for their potential death and make sure that if they went down, they wouldn't take all of the other financial institutions with them. Having been on those projects with many of you, really basic but extremely important tasks in terms of knowing what the plan is in a crisis, including the possibility of a pandemic, meant that our financial system was prepared for this. Along with all of this came an upgrade in capital requirements, CCAR, TLAC, all of these buffers built to ensure that our financial system had backstops and cash on hand for exactly this kind of a moment. Which leads to the regulator of the year, the Federal Reserve. They put together a number of funding facilities that kept afloat certain markets that needed to stay afloat. One of the Board of Governors, Michelle Bowman, gave an interesting speech at the Cleveland Conference last week. While we started with all of these higher capital ratios and more liquid assets than ever before, she noted that in March, some serious cracks emerged in Treasury markets, corporates, muni bonds, and the mortgage markets. And without being political, I will say that it came to a shock to everyone that the current Treasury Secretary sent a letter this week to the Fed asking for them to close up the emergency facilities by the end of the year, saying that they had served their purposes and should go back to Treasury. That way, Congress can reapportion it as necessary. I'm not an economist, but I do know that something needs to be done to hold these markets together a little bit longer until that vaccine makes its rounds. And the regulation of the year undoubtedly is the CARES Act. I don't know about you, but that saved a lot of people from losing jobs, healthcare, money, and homes. I loved it so much. I really hope there's another one soon. Just a little last juice to get us all to the other side of this pandemic. Another regulatory topic I'm thankful for in 2020 is the death of paper. Really, like paper checks, paper doctor's notes, paper notaries. This has created a huge expansion opportunity in the mortgage closing space, also for just many fintech companies that have been waiting for an industry driver just like this to better automate our future. Call me an early adopter, but you are talking to the person who was the 5th hashtag ever for RegTech. Another big regulated space I think our lives have been improved is in robocalling. The FTC held a voice-over internet service provider liable for its customer using the service for fraudulent robocalls. And every time I heard about a robocaller getting busted, it put a huge smile on my face. Imagine a world where we can start answering unknown callers again, and it will actually be a call we want. I know this view may be a little controversial, but I am pretty happy that the SEC eased up standards on who can be a qualified investor. On the balance, I think it does allow some really smart people to bet on things they truly believe in. I also think from a regulatory perspective, it has been a good year in terms of diversity and equality in our financial industry. I did see a lot of meetings about financial inclusion. There's still a lot of debate about the overhaul of the Community Reinvestment Act. And while I did call out a few places for nominating the same old board members, I did see a lot of organizations making a concerted effort to make their appointments a little bit more diverse. The push for equality, however, appears to have some unintended effects, which certainly happened this week with the OCC. If you haven't seen it yet, the title is misleading. I saw it and it said it was a new rule focused on providing equal access to capital. I assumed it was about diversity in terms of race, gender, and whatnot for the actual borrower. Turns out it's a proposed rule by the OCC that doesn't allow federally chartered banks to exclude funding based on an industry category. So the example they gave was a bank blanket refusing to give loans to the oil and gas industry because of climate change. That, according to this new rule, couldn't be a credit category. Instead, they have to do an appropriate risk weighting based on the individual applicant. The read is fascinating, so I strongly recommend you take a look. Overall, this week we had 2,400 alerts from 433 unique US regulators, and over 600 had to do with coronavirus. For the record, this week it's mostly CDC's fault because they publish a quarterly update about coronavirus for each individual country in the world. But generally, we used to think that the end of the year would be a light and easy time for regulation, but we know already from last year that it's actually the opposite. The regulators often push to get all of their last minute stuff out now. So at a minimum, you can expect more. But it really is impressive to be able to casually say that with complete certainty because of our amazing team at RegAlytics, which leads to the thing I am the most thankful for this year, our team. Werner, Aaron, Alexander, Larry, Atif, Daewung, Gabrielle, Tanya, Sarah, and Joyce. Even Nanita, Jusil, Mehran, Scott, Josh, Brandon, Will, Hybels, Nolan, and Tom, and the network of people who help us make this all work. We thank you. And we also thank our customers, especially Grant Thornton, Basis Code Compliance, 5 Star Bank, End Contracts, Evolve, and more I'm not allowed to name. Our early investors, you know who you are. Thank you for believing in us. And of course, to all of my personal friends, family, my quarantine, and my industry friends, I wish you all a very safe and joyful Thanksgiving. You are awesome.